I think a lot has been said today, about business enabling environments and access to capital, FDI, and also, some have had interventions on mobilizing domestic capital. I'd like to bring it down a little bit to, one factor of growth, which we know very well from countries with economic success behind them, including my own country, Sweden. Entrepreneurship obviously is required and it needs to be supported. I think when you look at what's out there right now in how we support entrepreneurship, and as a development agency, what can we do with official development assistance at our disposal to provide maximum leverage of our funds? And there's a number of things there. And one area is micro-entrepreneurship. And it's not the only thing you should do, but it definitely is something that needs to be supported. And I'd just like to tell a very quick story about a very successful program started by Percy Barnevik, the well-known former CEO of ABB and board member of General Motors. He has a program which we are supporting called Hand in Hand. And it uses some of the microfinance models that all of us know, the kind of savings group and the approach of using a savings-led approach to microfinance. But also, I think a lot of you will know that microfinance itself has not really been known to create sustainable microenterprises that much. It's about 10 to 30%. So if you talk about growth generation, microfinance is more about making us efficient as consumers to absorb shocks. That's all really important, and it's happening at a very large scale. The industry has about 150 million clients today, growing very, very quickly. But only about 10 to 30% of these clients succeed actually in using the microfinancial services for enterprise creation. So what Percy Barnevik was setting out to do was to see how he can increase that level up to 70 or 90%. And the model is a mix of financial and non-financial services, where he's been able to help about 1 million women entrepreneurs who were not entrepreneurs to start with at all. They didn't, in many cases, know how to read. So I'm starting from a very small micro perspective here, which I think is also important. And about 70 to 90% of these women today are running their own businesses and growing. So they're true entrepreneurs, employing people, creating value. The model is, in very brief terms, basically you start with creating a relationship, just as we know from ourselves going to our own banks. And after a while, you create a credibility as a client, you will get access to finance. The same applies to microfinance, of course. And once that has been established, there is a very targeted effort to try to provide incentives for the clients to go into a choice of a business plan. And they've developed very hands-on business plans for the locality where they work. And they work in Afghanistan, in India, and a number of South Africa, a number of countries. And they've developed tailored business plans for those localities. So the client chooses one business plan, and it's not rocket science. This is a bakery. This is some fundamental businesses that exist, but maybe they don't exist in the locality, and typically there's a lot of opportunities that have not been capitalized upon. So this is about capitalizing on those opportunities, allowing the local private sector to grow and for opportunities to be taken advantage of by these clients. So they choose an action business plan, they get vocational training on that specific business. There's a market research function, obviously, and to establish where exactly the business should be established. And then the most important part, actually, there's a second loan coming from the microfinance institution, which is larger. And that's the trick, because most microfinance institutions by far do not go above $1,000 to $2,000 for a number of reasons. So there's a lack of capital when you come up to the $5,000 to $10,000. But this is what is provided through this program. And by doing this stage-wise approach, they've had a 70 to 90% success rate. And that has been verified, in fact, in these regions. So what you see is, sustainable microenterprises growing and being developed, creating tax revenues, and a private sector growing from the bottom up. So I think that's one good example, and there's a lot of models, I think, that can be promoted out there today. And I think ODA should go into those types of models much more than is being done today. Obviously, also you have a missing middle finance and a little bit the source of capital, that question. Again, a lot of answers can be provided for where the sources of capitals are, but if you look at one missing link, it's very much the $50,000 to maybe $2-3 million investments in strategic infrastructure that may be owned by private companies or local governments want to move into that area and improve the marketplace, the fish landing station, all of those bottlenecks that you can identify in a number of ways in a local economy. And a lot of them actually are bankable. It's just that the capacity very often is lacking to develop the projects, to write the term sheets, so we were trying to help out on that side. Also, the capacity sometimes is lacking, or the interest is lacking by the domestic, the local, present banks to move into those opportunities. And how can you have economic growth if the most secure investments, which in some cases these are not being taken advantage of simply because they're too small? So there's two technical assistance kind of interventions here that we're trying to promote together with the Global Clearinghouse, and I'm really pleased to work closely with Barbara Samuels here, and I would like to thank her for moderating the conference today. The Global Clearinghouse on Development Finance has launched a partnership together with UNCDF with support from the Swiss Development Corporation to do exactly this. So once we together are building the capacity of project developers to write term sheet and project documents, building or partnering with local banks to see these opportunities, of course you have to back up the actual investment. And the credit enhancement here, this is the answer to the question that you were asking. So where is the credit enhancement coming from? Again, I think this is a place where ODA can be used. So ODA can be used to provide credit enhancement support for domestic financial sector to get them interested and involved in some of the smaller ticket infrastructure as well. You may have to be innovative and set up bundling of specific investment opportunities, but that can be done. Some of the risk mitigation instruments used for large ticket infrastructure can in fact be adopted to smaller scale with some adaptation. So the credit enhancement that we're going to provide is building on our ODA base, on the official development assistance that we have from donors, but it will also channel funding from some guarantee schemes. We hope that IFC and other partners will join in. And we can see how this approach can promote the smaller ticket infrastructure that is so important for the private sector at the local level to be able to grow. So that's the type of interventions that I would like to mention, that we know about and that we try to promote to bring about, capital development at the local level, the smaller and mid-sized investments.
Doing business in Africa, you can't afford to be without Africa Investor.